You gotta first understand how terrible your credit is before you can fix it. You can request copies of your credit report to accomplish this. Also, you have to get any inaccurate information removed from your file. Then, to demonstrate that you can handle credit, you gotta have a track record of responsible money management. It's also important to understand the fundamental components of credit, such as whether you make on-time payments on your debts, and whether you have credit card balances, and pinpoint the contributing factors that are damaging your score to improve it. Another important step is looking for inaccuracies on your credit report. Repairing bad credit takes time. It takes time to raise your credit score, and maintaining excellent credit habits is essential. A credit score is a 3-digit rating that is determined by the data in your credit report and is typically between 300 and 850. It helps lenders determine how probable you are to repay the funds you borrow. Although there are other credit assessment models with various score ranges, a credit score of 700 or above is typically regarded as good, and one of 800 or higher is exceptional. Welcome back to Finance Aligned. In today's financial video, we will give you some steps to go about improving your credit score. Number 1. Check your credit score. To begin, you have to check your credit score to see what factors are having the most significant impact. That is usually free, so you won't experience difficulty doing this. Here are some factors that have the most effect on your credit score. Your payment history, which affects 35% of your credit score, includes any past instances of missed or late payments, as well as determining whether you always pay your bills on time. Your credit utilization rate, which affects 30% of your credit score, indicates how much of your total credit line is currently being used. How you frequently use credit. This affects only 15% of your credit rating. Your current and past usage of various credit products. This affects 10% of your credit score. And lastly, the quantity of hard inquiries or recent credit account openings and applications that you've made. This affects 10% of your credit rating. It's important to look for any inaccuracies on your credit report, such as false personal details or accounts that were started in your name illegally. Dispute this information with the credit bureaus, especially if it's impacting your credit score. Your credit is unaffected by filing a dispute in and of itself. However, your score can vary if any information in your report changes. Number 2. Paying your bills on time. Your payment history, which makes up 35% of your FICO score, is the most significant component of your credit score. You can set up an auto pay for recurring bills, like student loans and automobile payments, to ensure you never miss a payment. You won't need to remember to sign into a payment gateway or mail a check because your bill will be deducted immediately from your bank account on the due date. To avoid incurring charges, make sure your checking account has enough funds to support your payments. You might be able to adjust the payment due dates with your creditors if many of your payments are due on the same day of the month, making it harder for you to pay them on time, but keep in mind that the adjustment may not be effective for a few billing cycles, so keep making your payments as required until they validate the modification. Being honest with creditors about your financial situation can be helpful. For example, various payment plans are available for federal student loans, which could allow you to pay less each month. Nevertheless, if you're unwilling to speak with your student loan provider about your options, you might not be aware of them. If you're struggling financially, credit card providers may also be able to temporarily lower your payment or interest rate. Before you skip a payment, if you're worried about it, talk to your creditor to see what you can work out. This can ultimately allow you to pay your bills on time. Number 3. Paying down debt. Your debts account for 30% of your FICO score, which is the second largest component after payment history. Your credit usage rate indicates how much of your credit limit you are currently using, and experts advise using no more than 30% of your credit limit at any given time. Your credit card balance should ideally be fully paid off each month. You also should have a plan to stop using your cards and pay off your debt if you are unable to do so and are currently carrying a balance. According to the debt avalanche approach, which will save you the most money in interest, you could decide to send extra money to the card with the highest interest rate first. The debt snowball strategy is another option that could inspire you to pay off minor bills. If you require a longer time to pay off your bills, a balance transfer credit card can be a better choice. A balance transfer card offers an interest-free period that enables you to pay off your amounts without accumulating as many fees over time, providing your credit score qualifies you for one. But to get the most out of the card, devise a strategy that allows you to pay off your debts during the interest-free period. Otherwise, interest fees will apply after that time, potentially wiping out some of your savings. Number 4. Avoid making new hard inquiries. You might want to hold off on applying for new credit while you work to raise your score. When a lender investigates your credit to see whether you qualify for a financial product, it does a hard inquiry. Your credit record will show it, which could lower your credit score. This is due to the possibility that lenders may view you as having a higher credit risk if you make multiple borrowing attempts. Your FICO score is 10% affected by credit application activity. Soft inquiries, which take place when you check your credit report or when a lender or credit card company examines your credit to pre-approve you for a product, don't have an impact on your credit. However, it's unlikely that applying to several lenders quickly for a single auto loan or mortgage won't have a significant impact on your credit score. Number 5. Get help developing credit. If you're having difficulty obtaining a credit card or loan on your own, you may be able to establish a credit history with the support of others or through the use of a secured account. You can try these strategies. You can cooperate with a cosigner who has excellent credit. When you have a cosigner on a credit card or loan, the lender also holds that person jointly accountable for the amount. Establish a safe account. When you open a secured credit card account, you deposit money into the account, and the card issuer lets you borrow up to a predetermined percentage of the funds. So, how do you ultimately fix your credit score? Starting to settle all of your payments on time is the most important step in fixing your bad credit. Put any past due accounts on autopay after bringing them up to ensure that you never again forget to make a payment. You can repair your negative credit by making loan and credit card payments in full. When you've put in the effort to improve your credit score, maintaining your momentum is the next stage. That involves constantly making on-time payments on all bills, keeping credit card balances low, and only applying for new credit when necessary. If you follow these steps to fix your credit score but are still having trouble, seeking assistance might help you regain your footing. You can develop a strategy to better manage your finances and pay off debt with the aid of an approved credit counseling organization. To ensure you're working with a legitimate organization, the U.S. Department of Justice maintains a list of approved credit counseling organizations by state. If you're battling with a lot of credit card debt, debt consolidation can be another alternative. With a debt consolidation loan, you can combine several high-interest loans into one manageable payment, typically at a lower interest rate. Always exercise caution when dealing with companies that promise to fix your credit for a charge, or that claim to be able to do so with little to no effort. It takes some time to repair your credit. At the end of the day, there is nothing that a credit repair firm does that you couldn't do yourself with some time and effort. You don't have to be overwhelmed by a low credit score. You can enhance it and keep your score as high as possible by taking specific actions both now and in the future. One of the most important continuous strategies in the effort to repair credit is to be aware of where you stand and avoid hiding from the truth about your credit situation. That's it for today. I hope you enjoyed this video. Kindly let me know what you think about this video in the comment section below. Don't forget to like this video and subscribe to our channel for more educational content like this. See you next time. Thanks for watching.